Good morning and welcome to the Crypto Dome. We are here live with Adam Blumberg, co-founder at Interaxis. Adam, welcome back.
Good to be back, Mehdi. And as we said, this is a pretty heavy news day.
It is a heavy news day for sure. And, yesterday we saw quite the shakeup in all risk assets. Aside from the less than favorable inflation print, we're also on the precipice of something big here. The merge in Ethereum. You've highlighted over the last couple of weeks the difficulty of the merge and have certainly not underplayed the complexity in getting this right. We're within 24 hours of this. And, do you have any sense on the way things are going to pan out? Or, is it still, just buyer beware, let's keep an eye on things?
I wouldn't even know how to have a sense of how things are going to play out. I have a timer going, and I think we're at like 18 hours or something. And
it's close to like 1 a.m. Eastern or something, right?
Yeah, it's moved to 1. And the interesting part, Mehdi, is the way they set the time, I guess, for when the merge will happen. It's not a set time. It's a set difficulty. And we're not quite sure. And the difficulty means, the difficulty is based on how many miners are online and how difficult it is to mine the next block. And when it hits a certain difficulty level is when we will switch from that proof of work to proof of stake. And so we're not even sure exactly what block that is. So when I have this timer on, I looked at it last night before I went to bed, and it showed that it's going to happen for me, in my time zone. I'm Central Time Zone. It was going to happen tonight at 10 p.m. When I woke up this morning, now it says it's going to happen at like 1 in the morning. So I don't think I will be staying awake for it. At least I'm pretty sure that something's going to wake me up at 3 in the morning. I'm going to check my phone to make sure that everything is good and I don't have to go find another job.
Yeah, I hear you. It'll be, it's going to be a very interesting waking up tomorrow. So, looking forward to it one way or the other. At least we can see how it all pans out.
Yep.
Fidelity. So, Adam, I love Fidelity. You know what? They have been totally leaning into the crypto world, and we've discussed this week in, week out on how they're kind of opening access to Bitcoin investment for high net worth clients or however they're doing it. But now they're also talking about potentially opening things up for their retail customers. This is another landmark move. This is great.
I think it's great. Fidelity they actually built their own custodial platform years ago. So they didn't partner with Coinbase or Gemini or anything. They just built their own. And they were just using it to custody, ultra high net worth or high net worth clients, people who had over $1 million worth of Bitcoin. I think it started at $2 million and dropped to $1 million. And they've steadily dropped that number, that minimum number of amount of Bitcoin you have to have in order to be a part of their custodial platform. Now, they've been kind of perfecting this custodial platform so that they can eventually get it down to retail. And I think with Fidelity, the back office or the meetings they've been having is talking about at what point are we ready to deal with the onslaught that comes, from a support issues, from compliance and regulation, all of those things. They know they have the custody down. The rest of it is, are we ready for retail to come in? But I think it's a good thing. If you don't have to go to a different account, if you can already be in your Fidelity account, log on, you have your other equities there, and you can, trade one out for Bitcoin. That's probably a good thing. For some people, it's probably a bad thing, right? They're going to FOMO in, they're going to, buy where they shouldn't. But hopefully at some point, as I'll always say, they go to some sort of financial advisor, some sort of financial help to determine how much Bitcoin they should have in their portfolio.
But also, onto the retail side of things, just, people who've wanted to invest in Bitcoin have found ways to do it at this point. It's not like, everyone's been restricted and this is that huge an announcement. It's just great getting, the big boys having that flexibility to, have, as you say, the one account access. For me personally, I hate having multiple different spots to go to different things and whatever. So, it is nice to have that one spot, especially when you come to tax return season. You send one set of docs over to your account and off you go.
Exactly. And what would be interesting, Mehdi, that I didn't see in any of the reports. Remember, the reports that we saw is Fidelity is seriously thinking about it. And your buddy and mine, Novogratz, kind of dropped a little bit that he heard from someone at Fidelity that retail is coming. Bitcoin for retail is coming. He talked about it at the Digital Asset Summit yesterday. So we're pretty sure it's coming pretty soon. But what's not actually talked about, what I haven't read about, is are they going to make it accessible for IRAs? They were the first, I guess, big custodian to say we're going to allow it in 401k plans. The question is, when they make Bitcoin available for retail, are they going to allow it in individual retirement accounts? And that will be interesting. That will be really opening up the floodgates, I think, both on the good and the bad side, right? The good side is a lot more interest in Bitcoin, and that's where so much money is in this country. Is so much of it is tied up in retirement accounts, and to have access to it in retirement accounts will be helpful for the price of Bitcoin. Maybe not good for regulators. That they're not going to like that too much. Fidelity is going to have to answer for that. So I haven't heard anything about whether or not they'll be available. Bitcoin will be available for IRAs.
Very good point, and good one to raise. And you know what? It'll be nice to see Fidelity and the regulators trying to hash this all out, because two big boys in the room can figure things out a lot more quicker than the small guys can.
And Mehdi, that's interesting, because it's one thing for the regulators to go up against Coinbase, who is a very large company, but nothing compared to Fidelity, right? Has nowhere near the size or the power that Fidelity has. So regulators can kind of bully around the crypto companies. It's really hard for them to bully Fidelity.
Well, and they kind of, I'm not saying they need Fidelity, but they also want the traditional finance firms slightly on side as they try and figure out the DeFi universe, right? So they don't want to alienate people like Fidelity.
No, they don't. They want them to help, because Fidelity knows how to keep people's money safe.
Yeah.
They really need it, and honestly, I think it helps regulators a little bit, because it lets them go, well, if Fidelity says it's okay, and you do something in your Fidelity account, now it's kind of on you. If you put too much Bitcoin in your Fidelity account, that's kind of on you. When you go to Coinbase and you had to go out of your way to set up another account, that's kind of hard. But now Fidelity said it's okay. So now, as an investor, I guess as regulators, we're going to say it's okay for now. We're going to kind of look the other way for a while.
And as always, Adam, you kind of give me a nice little transition to my next question or discussion point with you. You brought up regulators. Abra, they launched the first US regulated crypto bank. What does this actually mean? Like, I was reading the article and there's a couple of nuances in there. What does this mean to you?
What it means to me, Mehdi, is, so for instance, you've told me you have a Coinbase account, right? Now, when you have dollars in your Coinbase account, they're not FDIC insured. They're not protected at all by any sort of government or insurance. So now when Abra does launch, and they have not launched it yet, they are preparing to, and they are going to get approval. But when that happens, think about this: you'll be able to have dollars that are FDIC insured and crypto in the same account. So that, I think, is a pretty revolutionary from a safety and security standpoint. We just talked about Fidelity, and having that big name behind it is a big check. Well, having the government say, this is a bank, we're insuring up to $250,000 of the cash, obviously not the crypto, but of the cash that's in here. Well, now I can have an account that has dollars in it, that has a stable coin in it, and that has other crypto assets in it, all in one account. And that just makes things so much easier and honestly so much safer.
So, Adam, just to clarify on there, if I've got, let's pick $250,000. If I have $250,000 in my Abra account, I have $150,000 in Bitcoin and $100,000 in cash. It's purely that $100,000 in cash portion that would be insured under the FDIC. Yes, that's the idea. The cash portion would be insured. Now, keep in mind also that this takes Abra to a whole different level of regulation, right? They have to prove to the government that they have the assets to back what is in there. And that is very different from what we saw with Voyager, that was fraudulently telling people they were FDIC insured when they were not. And with Celsius, where people thought, because I'm earning interest, that there's dollar or there's Bitcoin backing this. This is a situation where Abra would have to prove to the government that they have the assets sitting there in accounts that they can access easily to be able to get people their money. So they're also partnering or have partnered with American Express to utilize some form of credit card or debit card, however they want to put it, charge card.
Right.
So this is a nice blend between DeFi and traditional finance, or is this going too far into the traditional space again?
I don't think it's going too far. I think it's necessary. Look, if you are a purist in terms of crypto and the ethos, and I want everything decentralized, and I don't even want governments and banks and anything anymore, then of course it's too far. But but in that respect, something like Coinbase is too far because they're a publicly traded company. This, I think, is a good move. This is something that we probably need to just combine the bank and the crypto in one for a lot of people that want to get in, want to have some of their money FDIC insured. Imagine if I said, look, I'm worried about the merge coming up tonight. I want to move all of my crypto into dollars for a couple hours to a couple days to a couple weeks to see how it plays out. And then I will go back and buy ETH. But I want those dollars to be federally insured. If something happens to Abra, if there's a run on the bank, I want to make sure that I can get my money. And you know very well, if you did that with Coinbase, you would have to pull that money out of ETH, put it into dollars, and then move it over to your bank and then go back. This is a situation where whether you're trading it or whether you just want to see crypto as part of your overall accounts, part of your money, this is a good situation. And we're seeing many more and more people in the world, honestly, getting paid in crypto. And I don't mean they're getting paid in Bitcoin like some athletes and the mayor of New York and such. I mean, they're getting paid in something like USDC. So this is a way where I could maybe get paid direct deposit into that account and have it converted into dollars. And now I have FDIC insurance, but I'm getting paid in crypto.
Well, that makes sense. I like that. That's a nice little blend and it's a nice little balance in both universes, one foot in each side. I know we've had some volatility in the crypto world, but let's talk about an uptick in our friends, the NFT world. Doodles. Yeah, what's going on here? They picked up a cheeky 54 million in its first funding round. What is Doodles and why is it relevant to us?
Well, Doodles is another one of those NFT projects that came about last year when everyone was creating them. When Bored Apes got really big, and Meebits and some others, and Doodles was created by a few people who left, I believe, Dapper Labs. And Dapper Labs, of course, is famous for NBA Top Shots, among others. And they left Dapper Labs and one guy who is actually an artist. And they created these doodles, and it's 10,000 different works of art that look like various faces. But what they've done, kind of like we've talked about before, is they're going full on with licensing, royalties, marketing. They're trying to go into all sorts of different creator spaces. They're trying to go into music, cartoons, movies, art, all of those things. And so, again, the idea is if I own one of the doodles, I might be able to get to participate in the movie or in the TV show or in the music or something. And it's kind of the equivalent of imagine, Disney launches right now. If Disney launched right now, they would likely have a bunch of NFTs and allow people to buy them and get to own the royalty, the rights to Mickey Mouse and Minnie Mouse and Donald and all those. And eventually, of course, with Disney, it would be the Marvel universe and the Star Wars universe and everything else. So imagine getting to do that. That's what Doodles is attempting to do. And of course, they got some big names among them, Alex Ohanian from Reddit, founder of Reddit, and more famously now Serena Williams' husband. It was one of the investors in, his new fund was one of the lead investors, or I think the lead investor in Doodles. So what they're trying to do is create a media company, but you and I have the ability to go own a piece of the characters that are developed by that media company.
But my question on all of this, right, comes down to brand recognition, right? So I'm 13-year-old kid and I'm looking at cartoons, comics, whatever it is. Am I more likely to care about a Marvel character backed by Disney or a doodle?
I think you're more likely to care about whatever interests you, right? Is that doodle, like I have a 7-year-old. If there were a cartoon of doodles and she enjoyed it and they, did things that she does, they go to the park and play with their friends and I'm sure, hide things from their parents and stuff. I'm sure my kid would love it. And she doesn't care that it's a that it's Doodles and it's an NFT project. She just knows that she likes the cartoon, or she likes the website, or she likes the characters she can go buy and play with.
I guess my question is more about, is there the likelihood of success? Because we're seeing NFTs come out of everywhere on everything, right? And, obviously I had my strong anti-NFT universe moment when Taco Bell started issuing them. But if we have, do you see more success coming out of traditional, existing, established brands, or do you think there really is a big space for these newer universe plays of a la Doodles, right? And we've seen it with the Bored Apes. They've created a huge successful following out of nowhere, right? So all of these things, how do you see this all kind of settling out?
I think the new ones, the ones like Doodles and Yuga Labs that does Bored Apes, I think they're going to be the ones that experiment, right? They're going to be the ones that kind of show the way. They get to experiment with royalties and with music and with how people are going to get paid and own them and creation and such. Because what do they have to lose? They just got a whole bunch of venture capital money that they can play with. And they've been on the cutting edge for a while. Just like we've seen other crypto projects, whether it's exchanges, decentralized exchanges, DeFi, or even Coinbase are the experimenters. And then Fidelity comes in and Schwab comes in and everyone else comes in and says, okay, you guys have done a lot of the heavy lifting to get us to this point. Now we're going to kind of see where we fit in. I think if we go to NFTs, we're going to see Doodles and Yuga Labs being the experimenters. They're going to be the ones that try out the technology and see what they can do with it. And then you're going to have the Disneys of the world and music producers of the world and Paramount and everyone else follow on and go, okay, now we see how we can do it. Because those firms, I mean, the likes of Disney, one, they don't want to cannibalize what they already have, right? They have more than enough money to experiment, but they don't really need to. They don't really need to play around with it. That's why Taco Bell did it. That's why Starbucks issues NFTs, right? They get to experiment a little, but they don't really have to. Starbucks has a good loyalty reward program. They don't need one. It's going to take someone else that is more on the cutting edge and more into this to experiment a little bit more with those of us that are willing to experiment on the other side, those of us that are willing to connect a wallet and buy some of these things and play around with how tokenized royalty flows through to my wallet. Doodles and Yuga Labs are going to have to do that, my feeling. And then the big brands are going to follow on. The big brands are saying NFT, that, Nike is talking about it. Nike even bought a NFT related company earlier, or I think last year, Artifact. And they're kind of trying it out. But I think it's Doodles and Yuga Labs that are really going to show the way, because they can afford to experiment. That's all they do. It's not like they can go back to their years of having Mickey Mouse cartoons and Iron Man. They have to totally build something new and carve out their own space. They can't just go have a Netflix cartoon. They got to do something different, right? They got to appeal to my daughter in a different way.
Perfect. I like it. And good luck to them. We'll keep an eye on how these NFTs.
Good luck to them holding my daughter's attention for more than 10 minutes.
Well, that's what they're going to have to focus on. I know that feeling. We discussed this a couple of weeks ago, the tokenization of funds. We've now seen KKR has launched a portion of one of their healthcare funds, and it's available on the Avalanche blockchain. Right. This is pretty awesome, right? So this is now, to clarify, this tokenization allows them to bring what would more be open to either high net worth or institutional investors. It's now bringing retail investors to the party.
Well, here's what I'd say. I wouldn't say it's bringing retail. This particular offering is not bringing retail investors to the party. This is still a hedge fund. It's still only offered to qualified investors, which is actually a step above accredited investors. You have to have $5 million, I believe, in liquid net worth to participate. The difference here, Mehdi, is they can now have some of those investors, which, let's be honest, they have an insane amount of money. If you have $5 million liquid, you have an insane amount of money anyway. But what they're saying is, okay, once you have bought into our fund, After a year, you actually have the opportunity to sell some or all of your shares now. And there's going to be an exchange that is going to vet people the same way. It's going to say only qualified investors can get in the room. But if you and I are both qualified investors, and let's hope that you and I both are at one point, and you've bought, $5 million worth of this PE, and after a year you go, you know what, I want to sell half of it. This is going to give you the ability to sell half of it to me, because it's tokenized, because you can just sell me half the tokens. I've already been vetted by the exchange, and now I can go buy some of your tokens. That doesn't really exist in the private equity world, in the traditional private equity world, the ability to sell. When you invest in private equity or hedge funds or private real estate, whatever, one of the problems is the incredible lack of liquidity. This is, for now, providing more liquidity. So it's not bringing retail in, it's providing some liquidity though. So if I wasn't in on the initial offering if I didn't know about it, and all of a sudden I, hit the lottery or sell my company and become wealthy, and I go, I want to get in. Well, now I can get on that exchange and go, well, yeah, this launched last year, but now I can get in on this. So we're inching towards that. And they're doing it for qualified investors, and then they'll do it for accredited investors. And eventually we'll get down to the retail level.
See, all right. So I misread that. In my retail, I just thought everyone had 5 to 10 million liquid assets lying around. So apologies for my misinterpretation.
We don't all hang out at the Lambo dealership all day.
There you go. So just before we wrap here, Adam, let's talk about the new exchange, right? EDX. EDX has had some big names, both backing it. We've now seen an ex-Citadel person going to be CEO and run it. Is this a good thing, getting this new exchange with people who allegedly have a lot of experience in the financial industry? This could be a very solid offering to the community, right?
It definitely should be. So it's Fidelity, Charles Schwab, Citadel, Virtu Financial, Paradigm, and I think one other that I'm forgetting right now. Sequoia Capital. So you have a few VCs in there, you have a few hedge funds in there, and then you have Schwab and Fidelity, right? And we'll go back to Fidelity, which we've already talked about today. Look, I think it's a good thing for people, safely and securely getting into crypto. And having all these partners. Remember, Citadel was famously very, very anti-crypto for a while, and all of a sudden has changed course. So that at least is a pretty good sign that they're putting some money behind this. I think it's good because just like we said earlier with Fidelity, there might be a way to sync up your brokerage account or maybe even eventually a bank account very easily and have it all be in one place where you can trade crypto, you can hold crypto in your account, you can do it safely and securely. Remember, these are all institutions, especially Fidelity and Schwab, that are heavily regulated, that have to prove a lot of things to the government before they can do things like this. And another big part, Mehdi, will be the liquidity here. It means that there will be plenty of crypto available on this exchange, ideally, because of the names and because of the numbers that they're going to put in. There's going to be plenty of liquidity. So it's not like all of a sudden one day the value of crypto, of Bitcoin or ETH is going to drop on this particular exchange because there's not enough of it there, because there's not enough demand or there's not enough supply. There'll be a tremendous amount of liquidity there. So in some respects, I think it's a very good thing. It's a very good thing for the retail investor that doesn't want to have their own wallet and doesn't want to manage their own keys or anything. It's, again, a step above what Coinbase is doing. As if you're, again, a purist or for the ethos of crypto, do you want all these big name traditional companies to jump in the pool with us? And then what is that going to mean for regulation? What is it? Is it just going to water it down to where they're just going to be glorified stocks at that point? That's kind of, that's kind of my worry on the kind of the ethos of it. But I think it's a good thing because, look, it shows the entire industry. It shows the traditional finance industry. It shows retail investors. It shows institutional investors. All these companies are heavily behind it. They wouldn't throw this money together and create an exchange if they thought it was a fad or a bubble or anything else. And for all this to be happening during what is obviously a bear market in crypto, I think is pretty phenomenal.
I think that's a very nice ending sentence. Thank you for that, Adam. And as always, I feel like we've unpacked a lot this week. There's been a ton of news flow. There's been a lot of volatility, but there's definitely been some very positive news flow to come out of what's been quite a tough week. So, we're staying on top of it. So, Adam, thank you
I
so
love
much
it.
for
Yeah.
sharing your thoughts.
Thanks so much for having me live here on Crypto Dome on a very eventful week, and we haven't even had the biggest event of the week yet.
It's coming. Watch the clock.
Yep.
1 a.m. Eastern or thereabouts. We'll see. Next week, we'll definitely have a lot to talk about. That's for sure. So we'll see you next week. Tune in. Open Exchange, thank you so much for making this all happen. The magic happened, Brendan. And everyone watching, don't forget to check out the links to digital assets and crypto education for financial advisors. You can receive a certification in digital assets to better serve your clients. Until next time, thank you for watching and good luck investing.